Hi guys, welcome to Investing with JYK, and today we'll discuss mostly the accounting standards difference in the context of Jardine Matheson. I don't know how to pronounce it. So this company, this Jardine thing, is an investment group that's been around since 1800s. So this stuff has been around forever, and then I look at the Seeking Alpha data aggregator. You see that the PE is really low, less than 6. The yield is reasonable, close to 4%, and market cap is tiny. Now, you might think, holy crap, this is a fantastic company, must buy. And that's what I thought. So then I dug into their numbers, and it turned out that a lot of that is accounting differences. So, what I had. Okay, so let's first go over what Jardine Matheson does. So this stuff owns a bit of that stuff. Actually, we should go to the. Let's see what they have. Right. So this guy owns 100% of Jardine Pacific, Jardine Motors, and Jardine Lloyd Thompson, some of Jardine Lloyd Thompson, and then 84% of Jardine Strategic. And Jardine Strategic, in turn, owns something like 50-something% of Jardine Matheson. So unless they issue more shares, the management basically are in full control of those two companies. And then Jardine Strategic, in turn, then holds these public companies: Hong Kong Land, which is a land trust, and Dairy Farm, sells dairy, presumably. Mandarin Oriental, the hotel chain. Jardine Cycle and Carriage, no idea what the hell that is. And Astra, some Indonesian stuff. Okay, so then you can, based on this, you can see the economic interest percentage. So essentially, 100% of Jardine Pacific goes to Jardine Matheson, and then goes on, and then this Astra is 32% of the economic interest go to that. So logically, the Jardine Matheson's market cap should be 100% of Jardine Pacific, in which case you don't know because it is really a private company. Jardine Motors, another private company. This insurance company, 42% of that. And then you could either do 84% of that or add all these up. So 42% of Hong Kong Land, 65% of Dairy Farm, 65% Mandarin Oriental, 63% of Cycle and Carriage. You could do that. Okay, so let's look at their numbers actually. So I think this one is the Jardine Matheson group. Yeah. They talk about some whatever stuff about investing in China. I mean, it is a fairly reasonable investment vehicle to China, but it's not the 6P that you see on the surface though. So here it just kind of just goes through different business segments. Okay, so subsidiaries in this case, really. And they talk about all of them, but that's not the most interesting part. The most interesting part is at the financials. Here we go. You see you have a revenue and operating profit. And then actually this is a bad one, so let's try to find the actual financial statement. Okay, here, consolidated profit and loss account. Well, in US would be called consolidated profit and loss statement. But this is operating with regard to I think it's called IFRS, yeah, International Finance Reporting Standard. And this stuff, okay, so let's look at this. So their revenue is $39 billion. So everything is in US dollars. Their net operating cost is fairly high, so operating profit is only $3.3 billion. It is better than 2016, so that's actually fairly good. You know, you got close to 10% growth. And then you have some financing charges, which is just interest and whatnot. And here you have some shares of results of associated joint ventures before changes in fair value. Okay, so these are how much they got from subsidiaries that are not full controlling. So in this case, it could be, let's see, where were we? We had, can't find anything. Economic interest, yeah, okay. So the ones that they don't have full economic control are these, well, at least Hong Kong Land is 42% only, and Astra is 32% only, and this Jardine Lloyd Thompson is 42%. Okay, so I don't know which ones go there at the moment, but I'm sure they will explain. So if we go to 8, that says, oh, okay, so they actually, every single one of them is in, like, broken out into subsidiaries. Okay, interesting. So that says 1193. Let's see what we got here. Go up here. Nope, there's still statements. Sorry, can't find anything. These numbers, none of these numbers make add up. Anyway, so somehow they got to this number. I probably have to look into this further, but this is the subsidiaries plus the operating profit gets you this profit before tax. And taken out tax, you're at $3.5 billion. And now you have to remove the non-controlling interest. So the ones that are given to the shareholders of other companies. In this case, I'll have to move this over, otherwise I'll get confused all the time. So essentially, you have to send, you know, more than 50% of the money to that you got from Jardine Lloyd back out to the public shareholders of Jardine Lloyd, and similarly for Hong Kong Land and whatnot. So yeah, so that's how this whole thing is supposed to work. It's a very complex share structure. I really don't like it, but it seems to be fairly common in Asian companies. And this is the number we care about. The attributable to shareholders of the company. So we, if you buy into the company, would be the shareholder of the company, and you would get all the shareholder of the company should get $1.5 billion in profit per year for the year of 2017, and per share that translates to $4.16. Now, if you look at the share price, it's actually this is ADR, but it's 1-to-1 actually. So it's $62. So we look at 62 divided by 4.16. You're looking at 15 times earnings, which isn't that cheap. So what's wrong with this number then, we may ask? And that's a perfect legitimate question, because we have this non-trading items. So I didn't know what the hell this non-trading items are, because that does not exist in US GAAP. So what I found was that this just means one-time, essentially one-time stuff. And you can see most of that goes into here. Change in fair value of investment properties. And that's 4.7 billion dollars. I'm like, what? Okay, so majority of the earning is really just an accounting term, right? So they're basically saying that whatever investment properties I had went up in value, so I have to book a gain. The US GAAP seem to have changed that too. Now you have to account for it too, which is really, really kind of stupid, but that's what we have. You can see this is almost double the 2016 one. So this could be, I haven't fully looked into this. We might click the note. They very conveniently place the note hyperlink here. But I'm guessing it's either property increase or share price increase. So let's look at that. But okay, before we do that, look at this. So you can see that the majority of that total, income, total profit after tax, comes from this non-trading item stuff. And the same thing, almost the same thing, goes on for 2016, where close to 50% comes from the non-trading items. And at that point, your the EPS now becomes $10. But most of this is just the accounting term here. This is an accounting change. This is not somebody actually paid them for whatever property they had, right? So they did not realize the gain. It's an on-paper gain. Okay, so let's click on this, see what these on-paper gains are. This is operating costs. That's not useful. Let's see. Let's go back, see if there's another footnote for that. Okay, so we're interested in here. Non-trading items. Let's see what they have. Non-trading, okay. Here we go. In 2017, the group had a net non-trading gain of $2.2 billion, which included net increase of $1.9 billion in fair value investment properties primarily in Hong Kong land. Okay, so they're saying that the land increased in value. Gains on property disposals of 194 million and gains on disposal of other investments of 52 million. Non-trading gain. Okay, so basically your half of the company is land speculation. There's nothing wrong with land speculation, but we have to know that it is land speculation before you buy into this, right? Land speculation is, there's a very nice land speculation company called Texas Pacific Land Trust. Fantastic company. In terms of land speculation. PB is probably, PB is insane, right? And PE is insane, but it's a fantastic land speculation company. So there's nothing wrong with it, but you must know that this is speculation, and then the result of a speculation is usually much more volatile than the result of actual business. And so you also don't expect them to pay out dividends based on accounting gains, which are the speculation gains. So yeah, I guess the takeaway is for companies outside of US, always be a little bit more suspicious of their PE. See how they derive their E. In this case, it's the underlying, what they call the underlying earnings is $4 per share, which means 15 PE instead of 6. If you want to speculate, that's fine, but that's always keep in mind. And also, this yield number is wrong because I checked last year. This number is actually correct. The number of dividend itself is correct. Last year they paid out $1.52, and if you divide by 62, you get only 2.4%, not 4%, not 3.8%. So I don't know how they get this number even. Okay, so this is one of the companies that I actually had my eyes on. I thought this was going to be a bargain, and because it had all the nice numbers, right? PB is below 1. The PE is really, really low. Return on equity is very reasonable and all that. Yet, if you check the actual financial report, you would see that the underlying earnings is much weaker than what appears on these data aggregators. And outside the US, well, in the US, I don't know how they do it now because there's a lot of changes. I think land for now, if you follow GAAP, you still account it at cost. But since it's outside the US, I don't really know how they account for fair value because a lot of things are very illiquid. You don't get any transactions for years. How to even know when things went up or down in price. Okay, so if you find this useful, please subscribe and click like. If not, click dislike, and see you next time.